When Warren Buffett makes a move, a multi-billion-dollar move, the whole world stops and listens. And that's exactly what we're breaking down today. Is this his final masterstroke? A bet that could actually redefine his entire legacy.
All right, so let's just jump right in, because this is the question on everyone's mind. Berkshire Hathaway, they just trimmed their legendary stake in Apple. Apple? And for what? To pour billions into a really surprising new company? So what on earth is going on here?
And here it is, laid out plain and simple. On one side, you've got them selling a piece of Apple. I mean, this has been the crown jewel of their portfolio for years. And on the other side, a massive new bet on Alphabet, Google. It's a huge pivot, and yeah, it definitely caught a lot of us off guard. And let's be really clear about this. We're not talking about some minor portfolio tweak. The first bite they took of Alphabet was worth a staggering $4.3 billion. That's not a test. That's a move of pure conviction. It signals a huge strategic shift. Okay, so the big question is, why? I mean, on the surface, this move seems to fly in the face of everything we know about Buffett's classic playbook. But if you dig a little deeper, a really fascinating logic starts to emerge.
You have to remember, for decades, Buffett actively avoided tech stocks. The guy literally said he doesn't invest in things he can't understand, and for him, that was Silicon Valley. So his move into Apple was a shocker. But this, a huge bet on an AI giant like Google, that's on a whole other level.
And this is the absolute key, you have to look at it through his eyes. He's not buying a tech stock. Just like with Apple, right? He didn't see Apple as a tech company. He saw it as an unbelievably powerful consumer brand. And now with Google, he's not just seeing a tech company, he's seeing the single most dominant media platform on the planet. It's all about how you frame it. And thinking about it that way is it's crucial. Because it shows this isn't some brand new strategy he just cooked up. Nope, it's actually an evolution of a very old, very successful strategy of his, just applied to our world today. I mean, look back at his history. The guy has always invested in the most powerful media companies of the era. We're talking the Washington Post, we're talking ABC, the giants of their day. He has always understood the immense value of owning the places where people get their information and spend their attention. So, fast forward to today. What are the dominant media platforms now? It's not a newspaper, it's not a cable channel, it's Google Search and YouTube. They are, without a shadow of a doubt, the Washington Post and ABC of our generation. It's the exact same playbook. And this isn't some crazy new idea. His legendary partner, the great Charlie Munger, he admitted years ago that not buying Google was a huge mistake, a massive error of omission, he called it. So in a way, this feels like Buffett finally making that right. Okay, so if they knew this for years, why now? What finally changed? Well, first things first, let's talk about the incredible strength of Google's core business. The one everyone thought was about to die? Remember when ChatGPT just exploded onto the scene? I mean, the story was everywhere. Google is done. Its cash cow, the search engine, was about to become a dinosaur. And honestly, the market was terrified.
But then you look at the actual numbers. And what happened? Instead of collapsing, Google's ad revenue growth has actually been speeding up. So yeah, the data tells a very different story. The core business isn't just surviving this AI attack, it's actually thriving. But this isn't just about surviving the present. For Buffett, this is a bet on the future. It's about Google's unique built-in advantage in what's going to be a very, very expensive long-term AI race. And the magic word here is vertical integration. What that means is Google owns the whole shebang. They design their own special AI chips, those TPUs you see there. They run them on their own worldwide cloud infrastructure. And then they build their own AI software, like Gemini, right on top of it all. They control everything from start to finish. And this right here is really the heart of the whole bet. Think about it. Because Google makes its own chips, it gets to avoid paying what's basically the NVIDIA tax that hits all its rivals. And that creates a massive, long-lasting cost advantage. This hardware advantage, this is a classic Buffett moat. It means they can run the long, grueling AI marathon for way cheaper than their competitors. It's pretty incredible. There are even reports that their chips from 7 or 8 years ago are still running at 100% utilization. See, this isn't about hype.
This is about cold, hard, superior unit economics. So you take that incredible cost efficiency, you combine it with a pretty reasonable stock price, and then you layer on all that future growth potential, and yeah, you start to see how this could be Buffett's next big masterpiece.
Okay, so what about the price tag? Is it a bargain? Well, if you look at how it's valued compared to its big tech rivals like Meta or even Nvidia, it's not dirt cheap, no, but it's very reasonably priced. It perfectly fits that classic Buffett saying, a wonderful company at a fair price. And here's the kicker. When you buy into Google, you're also getting this whole portfolio of other bets, almost for free. You're getting Waymo, which is a leader in self-driving cars. You're getting Google Cloud, which is growing like crazy. Plus, you're getting the AI that's probably going to be inside Apple and Samsung's next devices. And the best part? It's all paid for by that unstoppable river of cash from search and YouTube. Now, of course, no investment is ever a guaranteed win. And there are real risks here. Could the whole AI market be a giant bubble? Yep. Are some of those search numbers inflated by bots? It's possible. And hey, let's not forget, even the Oracle of Omaha gets it wrong sometimes. Just look at his bets on airlines or selling TSMC way too early. Which kind of leaves us with one big final question. With this massive bet, is Warren Buffett showing us what value investing actually looks like in the 21st century? Maybe he's teaching us all a lesson that true, lasting value isn't about the flashiest new app. Maybe it's about owning the essential, low-cost plumbing that powers everything else, the stuff that's going to run our world for decades.